car market is shaking like never before. Stellantis just dropped a bombshell, slashing prices by up to 60%. This is not your typical sale. Brand new trucks and SUVs are now selling for less than some used models. The ripple effect, it's turning the entire industry upside down. But why is Stellantis doing this? What's the catch? And how will it impact buyers, sellers, and competitors? Stay tuned, because this changes everything. What's happening? The automotive world is no stranger to bold moves, but Stellantis has just changed the game entirely. Slashing prices by up to 60%, the company is not merely clearing inventory, it is rewriting the rules of the industry. These cuts aren't minor adjustments, they're groundbreaking. Imagine walking into a dealership and seeing a brand new pickup truck for nearly half of what it would have cost just last year. That's not a dream, it's Stellantis' new reality. The reason? Overproduction. Stellantis, like many manufacturers, has faced mounting pressure to move unsold inventory from its lots. With rows of unused trucks and SUVs piling up, the company is opting for a bold solution. Dramatic price cuts designed to attract buyers who may have been sitting on the sidelines. This move isn't about tinkering at the edges, it's about creating a tidal wave that could reshape the automotive market. For consumers, this announcement brings extraordinary opportunities. Trucks and SUVs that were once out of reach for many are now attainable, providing buyers with the chance to own high-quality vehicles at unprecedented prices. The reward for paying attention to this market shift, you might walk away with a deal of a lifetime. As Stellantis embarks on this radical strategy, the big question becomes, how will these discounts play out across its lineup? Which vehicles are getting the cuts? Imagine this: the Ram 1500, a workhorse pickup truck that has long been a staple in the Stellantis lineup, now available for less than half its original price. Yes, you heard that correctly. Stellantis isn't reserving its discounts for slow-moving or unpopular models. Trucks, SUVs, and even some of the most sought-after trims are included in this pricing overhaul. Among the vehicles benefiting from these cuts are the iconic Ram pickups, Dodge Durangos, and select Jeep models. The reductions are staggering. Vehicles that once carried price tags of $50,000 or more are now being offered in the low 20,000s. This isn't a marketing gimmick or a fleeting sale. It's a company-wide shift to move metal and revitalize sales. For buyers, the reward is clear: access to premium vehicles at prices that were once unimaginable. For those who have been eyeing a new truck or SUV, the chance to upgrade has never been better. And while some discounts are limited to specific trims or model years, even top-tier options like Ram's luxurious limited trim or Jeep's Trailhawk editions are seeing reductions. This sweeping strategy ensures that buyers at all levels, whether seeking an entry-level work truck or a high-end luxury SUV, have something to gain. But what's even more intriguing is how Stellantis is pushing dealerships to make this vision a reality. Dealership pressure and compliance. Stellantis isn't just offering discounts, it is enforcing them with an iron fist. Historically, manufacturers have left pricing decisions to dealerships, resulting in inconsistent deals and, at times, customer frustration. But Stellantis has taken a different approach. To ensure buyers reap the benefits of these price cuts, the company is putting unprecedented pressure on its dealerships to comply. For some dealerships, this compliance is non-negotiable. Stellantis has already pulled franchise agreements from several underperforming or non-compliant dealerships, setting an example that it will not tolerate pricing games. In one dramatic case, dealerships in the state of Washington were forced to close their doors after failing to meet Stellantis' new standards. These closures send a clear message: the discounts are real, and any dealer who attempts to sidestep them will face consequences. The reward for buyers is transparency. No more haggling or hidden fees. Stellantis is working to ensure that its advertised prices are what you pay. For dealerships willing to play ball, this strategy also offers benefits, with Stellantis providing financial incentives to move vehicles quickly. This newfound alignment between the manufacturer and dealerships is paving the way for buyers to trust in the advertised deals. As Stellantis takes control of its pricing narrative, the impact on buyers is profound: a simplified, fairer car buying process. But why is Stellantis taking such an aggressive stance now? Why now is the best time to buy? Timing is everything, especially in the automotive world. Stellantis' decision to implement these discounts at the start of the year is no accident. The first quarter is a critical period for manufacturers, as it sets the tone for the rest of the fiscal year. With unsold inventory from 2022 and 2023 clogging lots, Stellantis is determined to begin 2025 with a clean slate. This is why the discounts are time-sensitive. Stellantis knows that every day a vehicle sits unsold, its value diminishes further. By aggressively cutting prices now, the company is not only attracting buyers, but also clearing space for its 2025 models. The urgency is real. Vehicles from previous years are being offered at discounts of 50 to 60%, but these deals won't last forever. For buyers, this creates a golden window of opportunity. Imagine securing a top-of-the-line Ram or Jeep at a price that was previously reserved for base models. The savings don't just end with the purchase price. Lower financing costs and insurance premiums are additional perks of buying at such reduced rates. Stellantis' groundbreaking price cuts are rewriting the rules of car buying, but they're also shaking up the competition. As the automotive world adjusts to this seismic shift, the ripple effects are already being felt far and wide. The market ripple that no one saw coming. Imagine a single decision that shakes an entire industry to its core. Stellantis didn't just lower prices, they detonated a pricing bomb that's forcing competitors to rethink everything. When Stellantis announced unprecedented price cuts of up to 60%, the automotive market collectively gasped. Automakers like Ford and General Motors, long considered untouchable giants, suddenly found themselves scrambling to respond. Why? Because Stellantis didn't merely undercut their pricing, they completely redefined what buyers expect to pay. For years, competitors thrived on the perception of quality tied to their high sticker prices. A truck worth $80,000 wasn't just a vehicle, it was a statement. But Stellantis has flipped this notion on its head. They've proven that premium trucks can be sold at a fraction of the cost without sacrificing value. This move has forced Ford and GM to confront an uncomfortable reality. They must either follow Stellantis' lead or risk being left behind. The result? Buyers are finally in the driver's seat, enjoying deals they once thought impossible. Stellantis' gamble isn't just a win for their customers, it's a wake-up call for the entire industry. And as Stellantis disrupts the new truck market, their bold strategy has another consequence: an unexpected collapse in the used truck market. The collapse of the used truck market. What happens when brand new trucks become cheaper than their used counterparts? Chaos and opportunity. Before Stellantis' price cuts, the used truck market was a gold mine. Trucks held their value for years, often selling for close to their original prices. But today, the landscape looks very different. Why would someone buy a 5-year-old truck for $35,000 when they can get a brand new model for $25,000? The used truck market is imploding, with prices dropping faster than sellers can adjust. For sellers, this is a nightmare. Imagine holding onto a truck you thought was a sound investment, only to watch its value plummet by 40% in just a few months. On the flip side, buyers are seizing the opportunity. Trucks that were once out of reach are now affordable, giving first-time buyers and budget-conscious shoppers a chance to own vehicles they never dreamed possible. The trickle-down effects don't stop there. Dealerships, which rely heavily on used car sales, are finding it harder to move inventory. Vehicles sit on lots longer, racking up costs and diminishing profits. In response, many are offering even steeper discounts, creating a buyer's paradise. Whether you're a first-time truck owner or looking to upgrade on a budget, the used truck market collapse is your golden ticket. Deals like these don't come around often, and Stellantis has made it possible. But the used market isn't the only sector feeling the heat. Stellantis' pricing revolution is forcing dealerships to rethink how they operate, sparking a new era in the car buying experience. Reinventing the dealership experience. The days of haggling with dealerships are over. Stellantis is rewriting the rules. Dealerships have long held the upper hand in negotiations, often adding hefty markups to vehicles under the guise of market adjustments. Buyers walked in expecting a fight, unsure if they were getting a fair deal. Stellantis, however, is turning that dynamic on its head. By enforcing strict pricing policies, they've ensured that what you see is what you pay. No games, no surprises. Imagine walking into a dealership and finding a truck priced exactly as advertised. It's not a gimmick, it's a new reality for Stellantis customers. These policies not only protect buyers from inflated prices, but also level the playing field across dealerships. Buyers in small towns get the same deals as those in big cities, creating a sense of fairness that's been missing for years. Dealerships that resist these changes are learning the hard way. Stellantis has already revoked franchise agreements from dealers who failed to comply, proving they mean business. This sends a clear message: adapt to the new era of transparency or risk losing your place in the market. Buyers now enjoy a hassle-free experience with clear pricing and fewer headaches. Stellantis has removed the guesswork, making the process of purchasing a vehicle smoother and more enjoyable. But this isn't just about making buyers happy. Stellantis' bold moves are setting the stage for a much larger shift in the automotive industry. The industry's response to Stellantis' bold gamble. Stellantis price cuts aren't just a strategy, they're a challenge to every automaker in the world. Ford, General Motors, and even Toyota are watching closely as Stellantis executes its daring plan. Historically, these companies have relied on brand loyalty and perceived value to maintain high prices. But Stellantis has shattered that illusion. With 60% price cuts on the table, these competitors must now decide, do they match Stellantis and risk their profit margins, or stay the course and lose customers? The ripple effects extend beyond pricing. Automakers are rethinking everything from production strategies to marketing campaigns. The focus is shifting to efficiency, with manufacturers exploring ways to cut costs without compromising quality. At the same time, they're doubling down on customer retention, offering loyalty programs, extended warranties, and bonus incentives to keep buyers from jumping ship. But Stellantis has another ace up its sleeve: innovation. By investing in hybrid and electric models, they're appealing to eco-conscious consumers while staying ahead of regulatory changes. Competitors must now juggle the challenge of matching Stellantis prices while keeping up with their technological advancements. For buyers, this means more choices, better prices, and a brighter future for car ownership. Stellantis' gamble is sparking a revolution, and consumers are the biggest winners. As the dust settles, the automotive industry faces a new reality. Stellantis has drawn a line in the sand, and the race to adapt is just beginning. But how will this impact the future of car buying? That's where things get even more interesting. The rise of hybrid and electric alternatives. Imagine owning a truck that's not just powerful, but also eco-friendly. Stellantis is making that a reality, and it's changing the game for the entire automotive industry. In recent years, the demand for hybrid and electric vehicles has skyrocketed, driven by stricter environmental regulations and shifting consumer priorities. Stellantis has taken this challenge head-on, investing heavily in hybrid and electric alternatives for their most popular models. Their Ram and Jeep lineups now include plug-in hybrids and fully electric options, catering to a growing demographic of environmentally conscious buyers. Stellantis' move into electrification isn't just about meeting regulations, it's about staying ahead of the curve. By offering affordable hybrid and electric trucks alongside their gas-powered counterparts, Stellantis has positioned itself as a leader in the transition to sustainable transportation. Buyers no longer have to choose between performance and environmental responsibility. This innovation is paying off. Hybrid and electric models are drawing in first-time truck buyers, younger audiences, and those looking to lower their long-term fuel costs. Stellantis' price cuts have only amplified this trend, making advanced technology accessible to more people than ever before. By embracing hybrid and electric solutions, Stellantis is paving the way for a cleaner, more efficient future. For buyers, this means they can enjoy cutting-edge technology without breaking the bank. But what does this shift mean for traditional gas-powered vehicles? As Stellantis charges ahead with electrification, it's creating a domino effect that's reshaping the industry's priorities. The impact on gas-powered vehicles. Is this the beginning of the end for gas-powered trucks? Stellantis' bold strategy suggests it might be. While Stellantis is embracing electrification, they aren't abandoning their roots. Gas-powered trucks remain a cornerstone of their lineup, especially in markets where hybrid and electric adoption is slower. However, the introduction of affordable electric options has created a new dynamic, forcing gas-powered models to compete like never before. To stay competitive, Stellantis has enhanced its gas-powered vehicles with updated engines, improved fuel efficiency, and modern features. They've also introduced aggressive pricing for these models, ensuring they remain an attractive option for traditionalists and those in areas with limited charging infrastructure. The result? Gas-powered trucks that are more capable and affordable than ever. However, this dual approach comes with challenges. Dealers must balance inventory, catering to both forward-thinking buyers and those who prefer the reliability of tried-and-true gas engines. Meanwhile, competitors are scrambling to keep up, either doubling down on traditional vehicles or accelerating their own electrification efforts. For consumers, the competition is a win-win. Whether you prefer gas, hybrid, or electric, Stellantis' strategy ensures there's a truck tailored to your needs and budget. As Stellantis balances tradition with innovation, another unexpected consequence is unfolding in the background: the shift in how vehicles are marketed and sold. Transforming the marketing playbook, What if car buying wasn't just about transactions but about experiences? Stellantis is rewriting the marketing rulebook and it's catching everyone's attention. Traditionally, automakers relied on straightforward advertising, highlight the features, offer a competitive price, and let the dealerships handle the rest. Stellantis, however, is taking a different approach. They're focusing on storytelling, leveraging their price cuts and new models to create a narrative that resonates with buyers. One of their most effective strategies has been direct engagement. Stellantis has ramped up its presence on social media, connecting with customers through live Q&A sessions, behind-the-scenes content, and real-time updates about promotions. This transparency builds trust and keeps buyers informed, especially in an era where consumers demand authenticity. Additionally, Stellantis has tapped into the power of influencers and community leaders. By partnering with automotive experts and everyday truck enthusiasts, they're amplifying their message and reaching audiences that traditional ads might miss. These collaborations often showcase real-world scenarios, from off-road adventures to urban commutes, proving Stellantis' versatility. Buyers are no longer passive participants in the car buying process. With Stellantis' innovative marketing, they feel informed, empowered, and connected to a brand that values their input. While marketing evolves, Stellantis is also reshaping the physical spaces where cars are bought, signaling a major shift in dealership culture. Revolutionizing the dealership experience. Imagine walking into a dealership and finding exactly what you need, without the stress or haggling. Stellantis is making that vision a reality. Gone are the days when dealerships could dictate terms and inflate prices. Stellantis has implemented strict pricing controls, ensuring that customers see consistent, fair pricing no matter where they shop. This shift is more than just a policy change. It's a redefinition of the dealership experience. By enforcing transparent pricing, Stellantis eliminates the games that have long frustrated buyers. Customers can now shop with confidence, knowing they're getting a good deal without needing to negotiate. This approach is particularly appealing to younger buyers who value convenience and clarity over traditional sales tactics. Stellantis is also introducing modern conveniences to dealerships, from online scheduling for test drives to virtual showrooms that let buyers explore vehicles from home. They're bridging the gap between digital and in-person experiences. Some dealerships are even offering home delivery, making the process as seamless as ordering a product online. For dealers, these changes are both a challenge and an opportunity. Those who embrace Stellantis' vision are thriving, while others who resist the shift risk losing their franchise agreements. Stellantis is sending a clear message: adapt to the future or be left behind. Buyers can finally enjoy a stress-free, transparent, and modern car buying experience. Stellantis is proving that dealerships don't have to be intimidating. They can be empowering. With their dealerships evolving, Stellantis is setting the stage for a future where car buying is faster, fairer, and more innovative than ever before. But what does this mean for the industry's long-term trajectory? The answers may surprise you. The ripple effect on competitors. Stellantis' bold price cuts aren't just shaking the table, they're flipping it entirely, forcing competitors to make dramatic moves to keep up and redefining the car buying experience. The decision to slash prices by as much as 60% has sent shockwaves through the automotive industry, dismantling traditional pricing norms. Competitors like Ford, General Motors, and Toyota now face an unprecedented challenge. For years, these companies relied on their reputations, innovation, and steady demand to justify premium pricing. But Stellantis has reset the bar, proving that high-quality vehicles can be offered at shockingly low prices without sacrificing reliability. Ford and General Motors are already scrambling to respond. Dealers are rushing to implement aggressive pricing strategies, offering substantial rebates, attractive trade-in bonuses, and extended warranties to lure buyers back into their showrooms. Toyota, long celebrated for its reliability and longevity, is doubling down on production efficiency to cut costs and stay in the race. Even luxury brands, accustomed to commanding top dollar, are revisiting their pricing strategies to avoid being left behind in a rapidly shifting marketplace. The impact goes beyond mere pricing. Competitors are radically rethinking their marketing approaches, emphasizing cutting-edge innovation, sustainability, and efficiency to regain lost ground. For consumers, this seismic shift is creating an unprecedented buyer's market, where not only are deals abundant, but the range of choices is broader than ever. Trucks, SUVs, and sedans are becoming more accessible to a wider audience, and buyers can now expect top-tier features at entry-level prices. Perhaps the most intriguing ripple effect is the question of how Stellantis' strategy will shape the used car market. Will these price cuts devalue used inventory, or will they ignite a race among pre-owned dealers to drop prices and compete? What's certain is that Stellantis has ignited a price war that is reshaping the entire automotive landscape, leaving competitors scrambling and consumers reaping the rewards of affordability and value. The used car market. If you're holding onto a used truck, brace yourself. Stellantis' price cuts are driving down resale values faster than anyone expected. The used car market has long been a haven for those looking to save money on vehicles, but Stellantis' massive price reductions on new inventory have disrupted this dynamic. When you can buy a brand new truck for less than the cost of a slightly used one, the appeal of pre-owned vehicles diminishes significantly. Dealerships specializing in used vehicles are feeling the heat. Many are overstocked with inventory they can no longer move at profitable prices. Private sellers, too, are struggling to attract buyers, as potential customers now flock to dealerships offering discounted new models. For truck owners looking to sell, the timing couldn't be worse. Vehicles purchased in recent years, particularly during the inflated pricing periods of 2020 and 2021, are rapidly losing value. Trucks that once held their worth are now depreciating at record rates. While this shift spells trouble for sellers, it's an incredible opportunity for buyers. Used trucks are more affordable than ever, and savvy shoppers can take advantage of the steep discounts to secure high-quality vehicles at bargain prices. But the used car market isn't the only sector feeling the impact. Stellantis' strategy is also transforming how cars are financed. Redefining auto financing. Imagine financing a new truck with payments lower than what you'd expect for a used model. Stellantis is making this a reality. Affordable pricing has a profound impact on auto financing. With trucks now selling for up to 60% less, monthly payments have dropped significantly, making brand new vehicles accessible to a broader audience. Buyers who previously hesitated due to high interest rates or ballooning loan terms are now re-entering the market with renewed confidence. Banks and credit unions are also adapting. Financial institutions are introducing innovative loan packages tailored to Stellantis' discounted prices. Shorter loan terms, 0% interest rates, and higher approval rates for buyers with moderate credit scores are just a few of the changes reshaping the financing landscape. The benefits extend beyond individual buyers. Commercial fleets, which rely on affordable financing to update their vehicles, are seizing the opportunity to expand their operations. From construction companies to delivery services, businesses across industries are leveraging Stellantis price cuts to upgrade their fleets and boost productivity. Lower financing costs mean more savings in your pocket. Whether you're a first-time buyer or a business owner, Stellantis' strategy is making it easier to drive away in a new vehicle without financial strain. As Stellantis reshapes pricing and financing, the bigger question looms: what does the future hold for the automotive industry? A glimpse into the automotive future. Stellantis isn't just changing the game, it's rewriting the rules. But what does this mean for the future of driving? The automotive industry is at a turning point. Stellantis' aggressive strategy has set new expectations for affordability, innovation, and transparency. As competitors scramble to adapt, the stage is being set for a future where value and sustainability take precedence over luxury and exclusivity. One area poised for transformation is the adoption of electric and hybrid vehicles. Stellantis has shown that pricing these models competitively can accelerate the shift to greener transportation. Meanwhile, autonomous driving technology is becoming more accessible, promising to redefine how we experience mobility. Another key trend is the integration of digital ecosystems into vehicles. Stellantis and its competitors are investing in connected car technology, enabling drivers to access real-time updates, remote diagnostics, and advanced safety features. The car of the future isn't just a mode of transport, it's a smart device on wheels. For consumers, the future of the automotive market looks brighter than ever. Lower prices, cutting-edge technology, and a commitment to sustainability ensure that everyone can enjoy the benefits of modern driving. Stellantis' price cuts have sent shockwaves through the industry, creating opportunities and challenges for buyers, sellers, and manufacturers alike. What do you think about their strategy? Will it change how you approach buying your next vehicle? Let us know your thoughts in the comments below. Thanks for watching.